A very warm welcome to you. Many thanks for joining us on this week's edition of Almond Finance and Wealth Report, your source for all the latest happenings in the world of business. My name is Margaret Mary Osiobor. You're welcome. On the lineup this week, recently, the National Insurance Commission (NICOM) announced the guidelines for the implementation of the tier-based minimum solvency capital requirement effective January 2019. We will join Faith and her guests on the town hall as they examine the pros and cons of this new initiative. As always, it's a no-holds-barred session. Do take a listen.
The capital base is not the issue. The one they raise, what have they done with those money in terms of returns and investment? We have not seen nothing. Today they are the whipping boys, and among the sector listed at exchange, the price today are trading 10 kobo, 20 kobo, almost 15 kobo. What are we talking about?
On this edition also, we will bring you highlights of the third quarter press conference of the Nigerian Council of Registered Insurance Brokers, which took place recently at the Brokers' House. Briefing journalists, the President and Chairman of Council of the NCRIB, Mr. Shola Tinubu, said that the Council will not relent in its efforts at training and retraining its members to position them for the unfolding challenges of the profession. Do take a listen.
The Council will not in any way relent on this training to position the members for the unfolding challenges of the profession.
Plus, of course, all the other extras we bring you each week on this program. So sit back, relax, and enjoy the lineup. Details in just a moment. Please stay with us.
The 2018 Almond Insurance Consumers Forum is finally here. The biggest and largest platform for insurance consumers to vent about customer service.
We are impatient. That is our caution. We don't have time for too much friendship. Tell us what you want to do, and we'll do it. So, speaking English even make it easier.
The insurance have to do a lot more aggressive marketing. If you get into My Two or go to Select, you see banks. All their workers are there. They are collecting the bank savings even as a susu. So that it will be easier. It agrees with what my brother was saying. They are bringing it closer to home.
Theme: relieving customers' pain points in insurance through exceptional service delivery. Date: Wednesday, October 24th, 2018 from 9:30 a.m. Venue: Kano Hall, Neka House, Hakim Balogun Street, Central Business District, Alausa, Ikeja. Chairman: Dr. Justice Clinton Uranta, former GMD Niger Insurance PLC. Guest speaker: Chief Chris Wadiegu Obi, MD Blue Pearl Consult Limited. Discussant: Mr. Tunde Oshadia, MD Guinea Insurance PLC. For inquiries, please call 080-333-57879, 0812-362-4081 or visit www.almondfinancereport.com. Admission is free. Almond Insurance Consumers Forum, where the insuring public have their say.
A very warm welcome to you. It's a pleasure to have you join us on the Insurance Industry Town Hall. Today we'll be looking at a very topical issue that is on the lip of everyone that's playing in the Nigerian insurance industry at the moment. That's talking about the insurance industry three-tier recapitalization system that was recently announced by the National Insurance Commission (NICOM), who are the regulators of the insurance industry. We are asking on the set today, is the three-tier recapitalization system for the insurance industry, is it the needed Elixir for the insurance industry? In our usual manner, we've gathered an array of tested personalities to do justice to our topic of discourse. In no particular order, I'd like to invite to join me on set Mr. Obina Chikelezie, who is an insurance researcher and consultant, having spent over 2 decades in the insurance industry with a lot of publication to his name. He has also presented at different fora in the insurance industry. Thank you, Mr. Okezie, for coming on the program. I'd also like to join me on set Mr. Boniface Okezie, who is the national chairman of the Progressive Shareholders Association of Nigeria. They are those one would say, at the receiving end of all the drama of recapitalization in the insurance industry. Thank you, Mr. Okosie.
My pleasure to be here.
Thank you so very much. Last but not least, I'd like to invite to join me on set Mr. Adeyemo Adejumo, who is a past president of the Chartered Insurance Institute of Nigeria. He's currently also a council member of the Institute, and of course, he's the former managing director of Continental Reinsurance PLC. It was during his term that they ran helter-skelter during the last set of recapitalization, and that is why I've dragged him on the set today. Thank you so very much, sir, for joining me on the program. Once again, thank you, gentlemen, for honoring us on this invite. Thank you.
Thank you.
Let me start by asking that the insurance industry has witnessed several mandatory increases in capital for as long as one can remember. The question, therefore, is the problem of the insurance industry, is it really that of capitalization? Let me say capitalization. Let me start with Mr. Adejumo.
Thank you so much, Faith. Where do I start? I like us to realize that insurance is practiced based on principles, and also insurance is international in nature. So you expect the industry to move in line with some basic financial principles that will be worthwhile of patronage and recognition all over the world. And I think this current event that is going on is just in line with what is going on all over the place in the world. You would have heard of Solvency I, Solvency II as means of measuring the financial adequacy of insurance industry generally. And I think this is where this new development is coming from, so that we will be as compliant as we could in the Nigerian insurance market. That's phase one. Phase two, if your capital is not adequate, there's no way you can perform anything in the insurance business. So the level of recapitalization that I went through in 2007 had drastically gone down by the devaluation of our currency. And the assets have also gone up in values. So by the time you look at the two and compare the two together, you will realize that definitely there's a need for adjustment in capital to meet the devaluation and other issues that have affected the industry. And finally, let us look at this recapitalization as it is done in the past. This current 3-tier recapitalization is saying that, look, we are going to advise you. I don't want to use the word restrict you. Okay. I don't want to use the word restrict your business.
But invariably, that is what it is.
That is what it is. Restrict your business to a level of capitalization. So it's not like the past where everybody has to be looking for money so that it can. But now they are saying that if you have this much of money, this is the kind of business you can do. If you have this much of money, then you can go to this level. If you have this size of money, then you can do all business in the market. So it's not left for you to decide, where do I want to be? Is it on level 1, level 2, or level 3? Whereas in the past, this is the capital, everybody must go out, look for it, and bring it in. That's just the thing. Whether you need it or not, you bring it in. And these are some of the issues that has affected the industry, and I believe this is what is giving the supervisory authority some kind of concern to bring up this kind of development.
Okay, Mr. Chikemeze, let me Shilekezi, sorry. Let me.
Well, I agree with him, but I have to deviate a little. In the first instance, we have to look at the Insurance Act. If you go through the Insurance Act, you discover that the law is principally capital-based recapitalization and not risk-based recapitalization. So what it means is that in the first instance, there is need for the amendment of the Act. Then going back also to the 2007 recapitalization exercise, incidentally then I was in charge of R&D in NIA. We did some analysis and we discovered that the industry in Nigeria is highly capitalized. Because when we are talking, unfortunately he's from the reinsurance sector, you discover that reinsurance, you can use reinsurance to play a prominent, in covering risk based on your capital. If you look at the current tier, my only problem with it is that first, like you said, if you go all over the world, Solvency 1 and 2, everybody is talking about risk-based recapitalization, but we can't do it in isolation. We have to address the issue of the Insurance Act first. And also, outside where you are having risk-based recapitalization, you discover that a company can, with only 100 million, sell only a class of insurance. You can decide to sell motor, and you use as low as 100 million naira with your insurance protection, and you still be in business. There are companies outside, you discover that apart from the marketing outfit, every other thing are sourced. So you have small companies, you have big companies.
Yeah, but isn't that the essence of what the three-tier base you are pushing right now?
If you look at the three-tier, it's just like saying you still have, when you are doing a structure like that, you discover that what we have now is still high. The capital base we have now is still high. If you go through the industry, the account, if you go through the NIA digest, you discover that not up to 10%, if you look at the premium income compared with the
level of capital,
you discover that what they have is still underutilized. And for a company to say, okay, because I've gone through the guideline, where you are now saying that compulsory insurance is like motor, except you are having the highest base, you can't play in that area. It doesn't, if you want to write motor, it doesn't need the kind of capital that is being proposed.
Okay, I'll come back to the two of you. Let me talk to Mr. Okeze. I know the last round of capitalization in the insurance industry, it is you guys they cry to, they say, oh, please help us, we need money, bring money, shareholders and all of that. Since 2007 up till now, I know I attend annual general meeting and I hear what some of you say. Some of the insurance companies have not lived up to expectation by way of the returns to those who have put their money in the last round of recapitalization. So now that they are saying, oh, you guys need to get additional money, I just want, what's your take on the whole?
Yeah, for me, I think the NICOM need to sit up. They are also messing up the system. They want to copycat, what I call copycat. They want to follow the banking, when the Sanusi started their reforms in the banking industry, either you go regional or national. I think this is what the insurance want to go. Either you have social capital base, you remain within the region, or you have this one, you go national. Is that what they want to do? Let them tell us clearly, because for me, the capital base is not the issue. The one they raise, what have they done with those money, in terms of returns and investment? We have not seen nothing. Today, they are the whipping boys. And among the sector listed at exchange, the price today are trading 10 kobo, 20 kobo, almost 15 kobo. What are we talking about? Not even a par value, which was 50 kobo per shares. They're not. Almost all the sectors, apart from few the insurance, that have gone beyond that, price level of the equity listed today. What are they talking about? So the appreciation is not there. The return on dividend is not there. So is it the capital money is the issue? Or is it the management are not doing well, or the board of those companies? Nikon is not doing what is expected of them, because some of them that are regulated are failures. Because they run insurance that also failed. They would not be able to recapitalize when they were running those insurance sectors. These are people regulating the industry. I can name them where they worked. The commissioners. They're all disaster. So these are problems they are creating, bringing all this in the fire brigade approach. That is not the way to regulate. Our regulators have become problem, a thorn in the flesh of most companies operating in Nigeria now. And that's the problem we're having. So give them 100 billion today. What return are you expecting from them? They will tell excuses.
Okay, that brings me to another question. Okay, Mr. Adejimo, I'm still going to talk to you about that. Now, every time you hear it's capital, let's get additional capital. The other time they were saying, oh, the capital, and I think you also mentioned it now that, oh, the capital they raised in 2007, there's no way it can be adequate given the devaluation of the naira, inflation rate and all of that. We agree. So when we now raise now, when does it end?
Prudent management should always look into its records and measure its capital adequacy. When I was working, I never waited for any law before we tell our shareholders that there's a need for us to raise more money to be able to do this business. And that is what is lacking in many of the companies, that is necessitating the supervisory authority to always come up and say, hey, you people have to jack up your capitalization. Before this last one, we were already over 2-3 billion in my former company in terms of net asset, even though they went up to 10 million, which we felt as at that time was quite 10 billion, which at that time we felt was so high. So for me, I don't think it's a where would it end. It is left to the company to decide on what can their business actually accommodate in terms of solvency. And like I said earlier, I don't want us to bring up criticism. Let's look at, is there any benefits in what they are proposing? If there are benefits there, then we can go.
Mr. Okeze said there's no benefit.
No, well, to some it may not be, but to some. Because for me, you find out that many companies are pursuing the same class of business, and that's why there are complaints here and there of rate cutting, not paying claims on time, and so on and so forth.
Okay, so speaking about that, what is the guarantee?
But let me just land with this one. But with this new development, they are not forcing anybody to raise more money, but everybody will stay at his own level. And when you are at your own level, you are expected to perform good at that particular level. So those who raise too much money and they are not doing anything with it, there's no need for it. That money you have, use it. When you are satisfied with what you are getting from it, you go to the next level.
Okay, now, some of the issues we are still hearing now among players is before the 2007 recapitalization, these issues, they've always been with the industry, chasing the same business on ethical issues and all of that. So we raised capital, consolidated from 102 or 3 insurance companies to about 50, 52,
49
then
50, 51
now 51.
Yeah.
These issues are still with us. So what is the measure of success you place on the last round of recapitalization before now that you are now pushing another round of recapitalization?
Well, I would say you have even answered it. What it shows is that capital is not the problem. The problem has to do with creativity. Most of the products we have are very, very obsolete. And you see, the world of risk is dynamic. Once the society is changing, the society will need the kind of protection that will meet their current needs. The other time, I was talking to some people. We discovered that most of the products we have been selling, even the mortality rate, these are some of those things we have been using since the 50s. They cannot solve this problem.
Alright, welcome back. Thanks for still staying with us. Moving on now, we'll bring you highlights of the NCRIB's third quarter press briefing, which is a platform for interaction between insurance correspondents and the management team of the council. Enjoy it.
The council would like to use this medium to enjoin politicians to endeavor not to overheat the polity in view of the potential negative effects of such actions on the socio-economic development of the nation. There is no better catalyst for investment in any economy than stability of the polity. Therefore, we enjoin our politicians to make the welfare and progress of the nation and its people their primary agenda and the focus of all their observed actions. The federal government recently announced that a 197 billion figure has been spent to construct 26,000 houses across the country, while about 14,000 homes across the country were also renovated. As a professional body, the NCIB wishes to laud the federal government's rent-to-own product designed to enhance affordability by eliminating the need for down payments and other costs associated with normal mortgage loan arrangements. Definitely, this will go a long way to address the housing deficit, a serious challenge that any government should tackle headlong. However, the council wishes to enjoin the federal government to ensure that in embarking on this laudable feat, insurance should be given its rightful place. Section 64 and 65 of the Insurance Act 2003 stipulates a compulsory insurance for ongoing construction projects. It therefore behoves the federal government to insist that appropriate insurance policies be in place for these houses at the construction stage and for the win-win benefits the project holds for government, the allottees, and their families. It is noteworthy that in the bid to ensure a more viral insurance industry, the National Insurance Commission recently announced a new capital regime for insurance companies. A new capitalization system tagged Recapitalization of Insurance Companies, the tier-based minimum solvency capital, would be partially introducing the risk-based capital model in a three-tier capitalization system, whereby firms will be graded as Tier 3, Tier 2, and Tier 1. However, it is noted that the tier system or process is independent of the assessment for solvency, such that companies classed as top tier could possibly have significant solvency issues.
And that is our time on the program this week. Many thanks for being a part of it. Do join us again next week, same time, same station, for a fresh package. In the meantime, get ready to attend the 2018 Armored Insurance Consumers Forum, coming up on the 24th of October 2018 at Necker House, Alausa, Ikeja by 9:30 a.m. Now, this is the only place where you get to express yourself on how you really feel about insurance products and services in Nigeria. And the good news is, admission is totally free. Then on November 16, 2018, the insurance industry will get lit at the 2018 Almond Insurance Industry Night, where entertainment meets insurance. It's going to be the first and the biggest insurance party ever, but admission is not free. Sorry. Anyway, for more details, watch this space or connect with us on all our social media platforms. Once again, my name is Margaret Mary Osiobor. Until next week, from the entire crew, it's goodbye.